This week, three major events happened in oil markets. December 16th, President Trump ordered a full naval blockade of Venezuela. December 17th, Ukraine launched drone strikes on another Russian refinery. December 18th, the EU sanctioned 41 more Russian tankers. The same day, the U.S. Treasury sanctioned 29 Iranian tankers. Yet every headline says oil oversupply. Today, I'm walking you through the actual data. 3 days ago, President Trump designated Venezuela a foreign terrorist organization and ordered a total naval blockade. 11 U.S. Navy warships deployed, including the aircraft carrier USS Gerald R Ford. 15,000 military personnel, the largest naval operation in South American history. Venezuela exports fell from over 1 million barrels per day to 258,000, a 75% drop. Ukraine has been running a systematic campaign against Russian oil infrastructure. December 5th, the Cizran oil refinery halted. December 11th, Slavnath Yanos refinery, 300 drones and missiles in one operation. December 13th, Saratov refinery, 9th attack this year. December 14th, Caspian Sea drilling platform, all 14 wells shut down. December 17th, Slavyansky refinery on fire. Carnegie Endowment estimates Ukraine has damaged 10 to 38% of Russian refining capacity. Russian oil exports fell 420,000 barrels per day in November. And today, December 19th, Ukraine hit a Russian shadow fleet tanker in the Mediterranean Sea for the first time, 2,000 kilometers off Ukrainian territory. The tanker Kendil was struck by drones in international waters off the coast of Crete. Ukraine is now targeting Russian oil shipments in open ocean. Here's what nobody talks about. The world consumes 103 million barrels of oil per day. Americans use 21 barrels per person per year. China uses 3. India uses 1. Africa, less than 1. Nigeria has 44 vehicles per 1,000 people. The global average is 180. India's car sales just hit an all-time record, up 40% in October. Chinese automakers are flooding these markets with affordable cars. The gap is closing fast. OPEC projects developing world demand will grow by 28 million barrels per day. India, Africa, the Middle East, Southeast Asia, these are the growth engines. OPEC says there's no peak oil demand on the horizon. In 2023, the IEA told us peak oil demand would hit by 2030. In November 2025, they revised that to 2050, a 20-year correction. OPEC said the IEA finally woke up to the reality. The old forecast assumed 3 things. The Green New Deal would become global policy. Electric vehicles would replace gasoline cars by 2030. Developing nations would skip fossil fuels entirely. None of that happened. Trump withdrew from the Paris Agreement on day 1. He froze Inflation Reduction Act funding. The EV tax credit ends December 31st, 2025. 70% of Americans say their next car will run on gasoline. Canada eliminated its carbon tax. Germany's new government is rolling back climate policies. The energy transition is stalling. Meanwhile, demand keeps growing in ways nobody predicted. AI data centers now consume more electricity than many countries. Data centers' power demand is set to double by 2030, triple by 2035. The U.S. has doubled oil and gas power plant development in the last year to keep up. Petrochemicals, plastics, fertilizers, now driving half of oil demand growth. As developing nations industrialize, they need more of everything, and people get wealthier. Jet fuel demand is projected to more than double by 2050. India's aviation sector alone is growing 7% annually. This is the core issue. Oil is a depleting asset. Every barrel produced today is one fewer barrel tomorrow. Without constant investments, supply falls. According to the IEA, if all investments stopped today, global supply would fall 5.5 million barrels per day every year. In 2010, that number was 4 million. Today, it's 5.5 million. Decline rates are accelerating. 90% of upstream oil investment goes to offsetting decline. not growth. Only 10% of the hundreds of billions spent on oil adds new production. Shale wells declined 40 to 50% in the first year. The Dallas Fed says break even for a new premium well is $65 per barrel. WTI today, $56. At current prices, new drilling loses money. Upstream investment is falling 6% in 2025, the largest decline since 2016. U.S. shale investment down almost 10%. Rig count down 68 from last year. Here's what Wall Street doesn't understand. The lower oil prices go, the higher they eventually go. I call this the depletion dividend. Low prices kill investment. Dead investment accelerates decline. Accelerated decline creates shortage. Shortage creates price spike. Price spikes higher than before because you lost years of development. Markets trade today's barrel. They can't see the barrels that won't exist in 2027 because the wells weren't drilled in 2025. Look at history. Inflation adjusted, 2008, oil crashed from $180 to $50 in today's money. Investment collapse. 2 years later, above $120 a barrel. 2014, oil crashed from $120 to $40. Investment collapse. 4 years later, $100 oil. 2020, oil went negative. Investment collapse. 2 years later, $140 a barrel. Every crash sets up the next spike. The market never learns. Supply following. Venezuela blockade 750,000 barrels per day, gone. Russia down 420,000 barrels per day in November. Global supply down 610,000 barrels per day last month. U.S. shale first annual decline coming in 2026. Demand rising. Developing world adding 1.2 million barrels per day in 2025. India car sales at record highs. AI doubling power demand. Petrochemicals driving half of future demand growth. Jet fuel demand doubling. IEA peak demand pushed back 20 years. OPEC sees no peak on the horizon. Current WTI, $56. At this price, investment is collapsing while demand accelerates. The lower this price goes, the higher the eventual spike. That's the depletion dividend. Now, here's what we know as of December 19th, 2025. The U.S. Navy is blocking Venezuela. Ukraine is attacking Russian oil infrastructure from refineries to tankers in the Mediterranean Sea. Global supply fell 610,000 barrels per day last month. Investment is falling 6%, the largest drop since 2016. At $56 oil, new shale drilling loses money. Meanwhile, India just posted record car sales. AI is driving the biggest surge in power demand in decades. The IEA extended peak demand forecast by 20 years, and the dominant narrative is oversupply. Markets are blind to depletion. They trade today's price. They can't see the wells that won't be drilled. They can't see the projects that won't be funded. They can't see the supply that won't exist. Physics doesn't care about forecast. Geology doesn't care about sentiment. Decline rates don't negotiate. The lower oil goes today, the higher it goes tomorrow. Every crash proves it. Every recovery confirms it. The depletion dividend always collects. I'm Sean Pruitt with Kingdom Exploration. Thanks for listening. And look in the description below. You can learn if you're interested in investing in oil and gas projects that are profitable today, that are 100% tax deductible. Look in the description or the comment section. Please share this video. Please comment. Even if it's just one word, please like, because the algorithms do not like the truth. I'm signing off. We'll talk soon. Thanks.